So hi everyone, welcome back to another video. So today I have another special guest, and I know you guys have been bored with all the different investing kind of content, right? So today I had Chris from Honey Money SG. So he's here to share a little bit more about personal finance. And maybe just to start off, what should my viewers know about you, Chris?
Sure. So I also do run a YouTube channel. It's called Chris at Honey Money SG. It's around 10,000 subs right now, and I talk about personal finance, early retirement, CPF, credit card stuff, and all that stuff, right? Meanwhile, I'm still doing YouTube as a part-time thing. I do have a full-time job, so I'm juggling between a full-time job and posting 3 videos per week. So that's kind of my lifestyle right now.
Right. So also recently I wanted to tap onto your personal finance knowledge, right? I saw you being featured on the Financial Coconut. So it's also a local podcast channel on Spotify. So I'll leave the link to that specific podcast that I'm talking about. So you did share about your plans on reaching 1 million by age 35. So I think a lot of my viewers are actually in the younger folks, and a lot of us do have a lot of overlaps in terms of audience age that are all in the early 20s, late 20s, or even early 30s. So maybe you want to share a little bit more about your plan to the rest of my viewers and see what we can learn from it as well.
Okay, so 1 million by 35 is actually a very huge goal, right, to a lot of people. Let's break this goal down into 2 parts. There is actually a savings goal, or maybe a monetary goal, which is the $1 million. And then we have a time goal which is meaning you could retire at age 35. So these are actually 2 separate goals. Most people only talk about the monetary goal, but they forego the age goal. I think the monetary goal is quite easily explained because we are talking about the safe withdrawal rate, the 4% Trinity study kind of stuff. That means you could withdraw up to $40,000 per year for your personal expenses, which you can go and spend it on your daily lifestyle and kind of stuff, right? $40,000, of course, it depends on an individual, whether it is enough for you. That is for you to decide, right? I think 40,000 is enough for me, but you have to decide for yourself whether 40,000 a year is enough for you. Now let's talk separately about the age goal. Now at age 35, you're probably still at a healthy stage. You don't have much physical disabilities or illnesses, so you could probably still travel around. You don't have difficulty walking, or if you want to do physical activities, I think age 35 is still a pretty good age to do so. Whereas some people, if they intend to retire at like 50s, 60s, maybe if they want to do something, their physical body may not be able to take it, and they cannot be that adventurous as they are in their 20s or 30s. So these are actually 2 separate goals that you should really look at. First, determine how much is the monetary value, and secondly, determine what is the time.
Right. So how do you achieve, or why did you stumble upon this number? Why is it this 1 million magical figure, and why 35? As in 35, you did explain that because you are on the earlier part of the curve, you still have a lot of things you want to do, right? So $1 million, it's based on expenses, it's based on how do you position yourself for this 1 million?
Yeah. So $1 million is really based on a 100% investing portfolio. So investing portfolio can really be about anything that is an investment asset, right? That includes your stocks portfolio, or if you have a bond portfolio, your crypto portfolio, your investment properties that are yielding you rental income, or if you do have other business ventures that can pay you passive income, right? I think those should be part of your investment portfolio. But what does this 1 million not include is your property for own stay, because when you are staying in your own property, you cannot actually earn any kind of income unless you rent out like a separate bedroom to a tenant, and also does not include your CPF retirement funds, because those are not considered liquid. You do not have access to these funds until you are age 55 or 65. Right. So that is how I determine the investment portfolio.
Right. So also I also know that because I'm an avid channel of your, I'm an avid viewer of your channel. So you also talk a lot about FIRE, and then you did break down a little bit about Fat FIRE, Lean FIRE, Barista FIRE. So maybe you want to share with the viewers that are maybe not so in tune with personal finance, what's the difference, and how are you approaching this entire FIRE movement?
Okay. So I think the difference between Lean FIRE and Fat FIRE is kind of distinct, right? Okay, so Lean FIRE means that you are living on very low expenses. So you probably maybe spend like $2,000 a month. So you multiply that by 12, you only need $24,000 a year. So that is a very lean kind of FIRE lifestyle, right? You don't have a lot of lavish expenses. You don't buy into luxury items. You don't travel to expensive holidays. So that puts you in a situation where you don't need so much to actually retire. Now, Fat FIRE is more for those kind of people who pursue luxurious lifestyle. Maybe you spend like $100,000 a year, which is considered quite expensive, right? The lifestyle that you want to lead. So maybe you with 100,000 you can go and travel to further destination. You want to go and engage or indulge in more luxurious lifestyle. You want to go parties. You want to go and do expensive stuff. That is the Fat Fire. But what I'm pursuing is actually Barista Fire. So what Barista Fire means is that you're going to take on a less strenuous job, which may not pay you as well as your corporate day job, right? Because in corporate day job, you are faced with this kind of high stress work environment, and that's why you are paid for this kind of level of work. But if you take on like a barista lifestyle, which means you take on a less strenuous role, you may ultimately take a pay cut, maybe like $2,000, $3,000 a month, but you could use this income to actually go and supplement your expenses. Therefore, you do not really need that much of the retirement income. So that's the Barista Fire kind of concept that I'm pursuing.
Right. So now after understanding his goal, so Chris here, he has a goal of hitting 1 million in terms of investment portfolio by 35. Let's pivot over to currently what are your investment holdings, and maybe you want to share in terms of percentage, how are your allocations, and how do you position yourself to make sure that within the subsequent 4 to 5 years you are able to hit this $1 million mark.
Okay, sure. So I can tell you all that I do not have investment property, so I do not have that as my investment portfolio. I also cannot consider my CPF, right? My CPF portfolio, although it's quite big. So what I do have in my investment portfolio is only the stocks portfolio and the crypto portfolio. For the stocks portfolio, about 50% of it is allocated to US individual stocks. So these are your mainly mega tech firms around the 1 trillion market cap. I also do have ETFs, index funds, around 20% of my portfolio. And then 15% is allocated to Singapore REITs. So that's more of like a dividend income play.
Right.
And the last 15% will be in a crypto portfolio. And for my crypto portfolio, it's mainly in Ethereum and stable coins.
So maybe in terms of projected, because I'm sure you're an Excel geek yourself, right? You like to play a lot in terms of numbers and make projections. What is in terms of currently your basic contribution to your entire portfolio, what's the expected rate of return you are looking at least in the next 5 years, if I'm not wrong?
So for my Excel sheet right now, I'm putting a 12% annual return. Of course, this 12% is not like I plug this number out of air, because individual stocks for my portfolio, they are yielding around 10 to 20% per year if we are not facing a recession, and that's a big if, right?
Right.
And of course, if we are talking about crypto, it's definitely above the 20%. It's a high risk, high return thing. Of course, it could go down to zero, but because I'm putting my monies in the more stable kind of cryptocurrency like Ethereum and stable coins, so that kind of reduces the risk by a bit. But of course, not every year I can definitely hit 12%. Some years you may really go negative or even zero returns, right? So, but some years you may really face a boom and you go over 20%, like last year, right? So all this kind of thing average out, and you really have to just decide for yourself what is the comfortable assumption that you would use.
Right. So now maybe to also add on this investment part, right? I know a lot of my viewers are all investors of Alibaba. There are bulls, there are bears. So also from the way you broke down your entire portfolio just now, I know that you have never talked about Chinese tech exposure or any forms of Chinese stocks. So maybe you want to clarify, do you have any Chinese position? And if so, why? If not, why yourself?
Okay, so I do not have any Chinese positions, be it individual stocks or index funds, right?
Right.
I think the main reason is because I do not want to be exposed to political risk or regulatory risk faced by the Chinese Communist Party, right, CCP. I think that Alibaba is indeed fundamentally a very great company, a very good company in fact. It's profitable, it has a very good business, but there are some things that Alibaba cannot control, and that's the Chinese government. You see, we could place our eggs in where we believe in, right? My faith is more in conviction of the US economy and US stocks. And I don't think there's anything wrong in investing in China. I think you could totally do that. I'm not against investing in China. It is just my own personal preference and my own risk appetite that I do not prefer myself to invest in China. And that is why I don't hate people for investing in China at all. I like people who may bash chicken on his channel. I don't want to do that. So I really respect his decision to go and invest in whatever he believes in.
Right. I think that's also a very important sentiment that I wanted to echo. please self-adjust your own risk profile and do whatever you're comfortable that you can sleep at night. I think that's the most important factor. Then also, maybe I wanted to just tap onto your 12% and maybe challenge a little bit in terms of your assumption, right? And how you projected your net worth and however X amount or X dollar or X percentage. So I actually have been recently reading up on some funds, right? Or maybe some projections. So just to give you off the top of my head, I think Ray Dalio is also Bridgewater's CIO and CEO. So he did give a very gloomy outlook in terms of US equities performance because we do understand that they do have a huge track record of over 100, 200 years where they performed around 8 to 10% returns on a year-on-year basis. But I think the last 3 years was exceptionally different. I think it was, you can say it could be a special moment, you can say they can continue this bull run. But his outlook actually is only around 4 to 6% returns, just on a broad-based US index. So do you have any thoughts on that? Or maybe you hold a different view from all this on how he looked at the entire US markets today?
Okay, so Ray Dalio is a very seasoned trader and investor, right? Of course, I'm nothing compared to him. His thoughts hold more value compared to my thoughts. Whatever he say may happen or may not happen because he's also still at the mercy of the market. If I want to use 12%, it's really my own opinion, and I don't think you should bash anyone who's saying that you cannot achieve 12%, you cannot even achieve 10%. This kind of thing, right? Nobody can really predict the market, not even Ray Dalio. This is his perspective. Of course, if I read into his contents and I find it valid, maybe I will adjust it down. But as of this moment, right now, I don't think I will adjust it down. But further down the road, right, maybe in the end of the year, I will see how things change because the market is really dynamic. We really cannot control all the sentiments and even news like the Russian-Ukraine war, right? It really hit a lot of investors hard. So I think it's more important to be dynamic and adaptive rather than following somebody and whatever his views, you just take it wholeheartedly and say that this person must be right and you must be wrong. I think that's more important.
Right. I think always be critical about different perspectives. Even bulls of China, bears of China, bulls of US market and bears of US market. You should take the value of the argument and not just because this guy is X, he hold X title or Y title and then that's why you can trust him. So I think also maybe to just wrap up this entire discussion and conclude, right? As I said, there are a lot of young folks out there. I think the majority of my viewers, I think around 50 to 60%, you guys are in the 25 to 35 range. So in this case, do you have any hacks or advice for people that are in like as young as us? Do you have any advice for them if they also want to achieve whatever you have achieved or on at least on track to achieving maybe they might scale down their goal, maybe 500,000 by age 35. Do you have any advice out there for all the younger folks?
Okay, so I have two main broad points that I want to talk about. The first one is the starting point, and the second is the process. Because I already talked about the end game, right? So I'm not going to talk about the end game. So the most important thing is to start. Most people would not start because they would say that they have no money, or they have no ideas, or they have no skills, nothing, right? I think the most difficult thing is actually to start. And how do you start? I think the most important thing, track down your revenue, or which is your income, your expenses, okay, your investment plans, how much are you planning to dollar cost average every month, and how much are you going to pay in taxes, all those things. Treat yourself like a business, right? The profit and loss statement. So you go from top revenue, expenses, cost of goods sold, and all that stuff. And then you plot out your 1 year profit and loss statement. Okay, and based on this profit and loss statement, you project it to the next year. How much income increase are you expecting next year and for the next 5 years? How much expenses are you going to grow? Maybe you have some wedding or renovation housing expense that you want to include in the future years. And then how much is your net worth expected to grow with your assumptions of your investment return? So you do like a spreadsheet for yourself, and even your CPF, you can do that too, right? That's what I did. I projected my own CPF, how much CPF should I have at this age and stuff. Once you have a better plan of your next few years, then you can see that whether you have hit your milestones. I think once you have cleared some milestones, you become more motivated, right? That you clear this milestone, maybe I can do it a little step higher. I want to take it further. I want to have better targets. So the most important thing is to start. In fact, start from your current year, 2022. What are your goals by the end of the year? What is your net worth that you want to achieve? Okay, and secondly, let's talk about the process. Okay, the process is a little bit more difficult because along the lines, right, when you're pursuing this kind of FIRE thing, a lot of people will actually criticize you. FIRE is really not a most common thing back 20 years ago. In fact, early retirement is actually a really new concept, and a lot of people would not get it, especially your parents, the seniors, your teachers even. So a lot of people will criticize you along the way and telling you that you are just talking rubbish. You see, it's not realistic to retire early. Okay, so what this world has is that people, they usually follow the system, right? The system has built in for them like what age they should go and take up a job, what age should they retire. And this is really like a mediocre mindset. If you really want to be special and extraordinary, you have to do what mediocre people are not doing. You have to lead a lifestyle that they are not going to live. When you are living the real lifestyle that you really want to achieve, then you can look back and tell them, because I did things that you are not willing to do, and that's why I'm living a life that you are unable to live. So that is the message really behind all this kind of FIRE or early retirement thing. A lot of people will really look down on you, but really ignore the noises. If you really believe in what you're doing is right, continue carrying on and you will find your way one day.
Right. Thanks, Chris, for I think it's an extremely thoughtful and a very insightful conversation, especially for someone that is actually practicing whatever that he's preaching and he is doing. You can check it out on his channel. He goes on to talk about a lot of different life hacks like credit card, how to maximize your CPF, how to invest, etc. So please feel free. I'll leave the link in the description box down below to catch him on his channel. And I think other than YouTube, if you don't want to do YouTube anymore, maybe I think that last part, right? It really screams like you have the passion for being a motivational speaker, and it inspires people. So
sure.
Please feel free and please show some support. Please smash the like button and subscribe. And if you like it, please leave in the comment section down below. And with that, I'll see you in the next video. More importantly, I will see you on the moon. Goodbye.